All right, so this is gonna be day one of studying supply and demand, studying liquidity, um, liquidity sweeps, zones, all of that. Um, Trading strictly the New York session, 9:30 to 11 a.m. on the 5 minute time frame, with higher time frame analysis on the 15 minute, 1 hour, and overall liquidity, overall overall swings on 1 hour and 4 hour, 15 minute for supply and demand zones. So let's go to the start. I traded one, two, 10, exactly 10 New York sessions, I believe. I placed trades on 10, but there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11. 11 New York sessions. So I'm gonna start on the higher time frame, my 4 hour. So started off here, obviously bullish. I'm gonna use call outs here. Change it because I want it to look back. Border black. Then, all right, we're good. I also want text wrapped as well. Cool. Here, obviously bullish here. Obvious bullish sentiment. We see price creating higher, lower highs and lower lows. Bearish. And this could be seen here. So I started here. We see Asian session. So now we scale down, get deeper into the markets. We see Asian session. We see price rally down, sweep this low, right? Take this low out. So now see a break a structure here. And then we see price sweep liquidity here. So as we know, liquidity is lying under this. We see price get down here. It was obviously a fake out. Price took liquidity, and now this liquidity is essentially a reversal pattern. So we're looking for a pullback, and liquidity is swept. Liquidity swept. Turning our eye to understand and see liquidity sweeps. We see London session, price now break structure. We now see an internal break of structure, BOS to the upside. And again, on the 4 hour, we do understand that price is still in a downtrend. So now we're looking for price to just pull back, break a structure to the upside, looking for a pull back before rally, or rally down, as we are still ranging downwards. So what's our range right now? Our range is this high that took out this low. So from this high to this low, this is our range. This whole range, we could see price get back up here and then you slam down or something. Yeah, so going back to the 15-minute, we're waiting for New York to open. Once we see New York open, we're waiting. We're just waiting for New York to open. So once New York opens, we see price come down. We have this area of demand here as price slammed down from this point here. So it did get tapped before, but this does solidify the fact that there is like liquidity here. So we want to see price potentially sweep this liquidity or just tap into this area then push up. So of course liquidity being swept is going to be the more favorable entry, but I did enter here, saw price tap down, wick, and close 50% of the candlestick. That was enough for me to enter. Obviously price slammed back down, but I saw price came down, took liquidity, and then closed up. When we see liquidity, okay, let me saw price tap back into, this is sort of a support area. I'm still combining support and resistance and supply and demand in the same concept, but support area or supply. This is a supply. No, demand. I'm pretty sure demand. Demand zone. So, and close 50% of candlestick. Didn't wait for confirmation. However, I didn't wait for confirmation. That's what I went wrong with this trade. I didn't wait for confirmation to the upside. So we see a tap, then a push up is where you really want to enter. You could wait for a break of structure, but I'm trading a very small time frame, so I don't want to wait that long, you know. However, didn't wait for a confirmation. So that's what I want to start waiting for, a confirmation. Confirmation, either a strong bullish candle that overtakes the previous candles, you know. Something like that is a strong confirmation, enough for me to enter to the next high, to take out the weak high. But yeah, so didn't wait for a strong confirmation. So that's where, so I was stopped out, but had the right idea. I like the idea. I like the idea with that trade. However, here we see price sweep liquidity here. Price sweeps liquidity. We see a strong, that's the key word, strong reaction to the upside. That's what we want to see with liquidity. Once we see liquidity get grabbed, a confirmation is a strong reaction from that, a strong reaction to the upside. So see a strong reaction to the upside, and we enter with TP up to the weak high that failed to take out this low, weak high, and stop loss. For my stop losses, honestly, I'm just aiming for a 1 to 3, where there is a 3 to 1 risk to reward. I don't have a set stop loss area because I do know that since liquidity was grabbed, price likely isn't going to come back into that area. Considering liquidity was grabbed, there's not a high likelihood that price will come all the way back down, and if so, it's a run. It's a liquidity run and not a sweep as we want to see. Sweep down and continuation. We see this was inducement right here. See this? Likely was in inducement. Getting buyers to enter and taking liquidity. Yeah, that was that for that trade. Block to this top here. We see price tap here, then start to pull back, and we want to see that pull back. But overall, we're still, let's see, where are we at? Okay, so here. Okay, so these are a lot, I can't lie. Probably just gonna screenshot then clear over the chart. Probably, yeah, screenshot then clear the chart. So give me a quick second. All right, so now we see a break to the uptrend, or the break up, and need this anymore. Yeah, now we're waiting for the next session to begin. Or we're gonna start analyzing on the New York session. So what do we see here? Solid breaker structure to the upside. We see price continue pulling up. And what is our overall target, or our overall goal, is to just see price retrace probably back into this. We're just waiting. We're just waiting to see if price is gonna sweep and take over this high. This high right here. This high right here. Take this high right here, or if we're gonna see price get to like this area, then continue down, boom, 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 you know. So yeah, so we scale down. Let's go back to the 15-minute London for Asian session. We see price. Yeah, we're continuing to see new ranges be created. We're seeing higher highs and higher lows. Higher high, higher high, higher low, or higher low, higher high, higher low, higher high, higher low, higher high. However, here, what do we see here? Hold on, let me just. Throughout Asian session, price continue to create higher lows and higher highs. And what is our overall goal with price? Retrace or pull to see price pull back, then give confirmation to enter first sells, because our swing structure is bearish. However, our internal structure is bullish, right? So we're waiting for a change of structure. So our strong high price has yet to break. This is our strong high, right? So as we finish seeing London session, as we see London session finish up, we see price sweep above this high, come above this high, right? Home over above this high, but I'm not seeing strong confirmation. If we go on the 1 hour here, you're not going to see strong confirmation of price pulling up. We're going to see price push up, small candlesticks. But what is price really creating here? Price is probably creating liquidity, because we are seeing price just small candlesticks, not a lot of momentum. We see the buyers stop playing out. We see liquidity being created. Liquidity is being created right here. And what do we know? Liquidity. More times than not, price during London sessions is going to create liquidity. Starting New York's going to sweep it, and then we're going to continue in the real trend, you know. So hindsight, we don't know this. What are we waiting for? Waiting for New York session. And once we see New York session start, sorry about this. See New York session start. We see price sweep all the way up. Waiting for start. And typically we will see liquidity be taken from London in New York session. As we wait, we see price take liquidity, then push strongly down. A confluence that tells me liquidity has been grabbed and institutions have grabbed are in or sells. We see a strong rejection after a liquidity grab. We enter. After liquidity grab, we are back in the range. We enter for a sell because we know price didn't truly break structure. Line above. So our TP is at the previous or the weak internal low. And as we see, we enter, price goes all the way down to our low. Stop loss, if we kind of just placing it above strong candlesticks. Kind of hoping, I'm not too sure on those stop losses, but just placing them above big candlesticks. But can analyze this more and refine it, but as for now, that's where it is. So see price come all the way down, take out this weak low that failed to really break. It just made liquidity. It failed to break. So yeah, I'm gonna screenshot in 1 second. All right, so let's scale out again. Say we're right here, start of London. What do we see price do? Scale out. We saw liquidity get grabbed. So I'm still bearish here. See liquidity get grabbed. You see an internal break of structure. So now we're very bearish. Looking for the swing structure to shift bearish as well once we see a break of this. But as for now, we're looking for price to get all the way down here to take out this weak low that failed to break this strong high. So Asian session continues to create lower highs and lower lows. See a break of this. We see a match of lows here, but London session, we do see price come down, come up, come down, come up a little bit, but there's still our range right here. This is our range so far from here to here. So we're trading it between this range. New York session, we scale down again. Right now we're looking for sells. We're not looking for buys. Internal, we're pro swing and pro internal. Internal is bearish, and swing is bearish as well. So we're looking for. We see price get back into this demand. Why is this demand? We look back on the 15-minute, and we see price right before price push down. This was the last place that price, or the first place that price got institutional backing. Price just straight slammed down. So we're looking for price to tap back into this area, then slam down. Not just regular support and resistance. This is institutional backing. So what do we see again? We see liquidity get built again in the London session. So let me mark this out. Supply zone marked from Asian session. Okay, yeah, supply zone marked on Asian session. So where's price right now? Before anything even opens, we see again liquidity is getting built. Liquidity gets built once again. What is a normal trader gonna do, or a retail trader? Yes, see the zone? Yep. Support and resistance, tap, or got here, drop, got here, drop. Once it gets here again, I'm selling right here. Okay, we see a tiny wick here. Let me sell right here, all the way down. Yep, this is a good trade. Instantly stopped out. Why? Because price sees stop losses here, and buy orders here as well. Oh yeah, see here, it's gonna break out. See, price accumulates, takes it out, and then real move. Liquidity gets built once again during London session. And we also have a supply zone right above us that hasn't been fresh. This supply zone hasn't been mitigated right above this I'm gonna say support zone that hasn't been mitigated. This supply zone hasn't been mitigated, hasn't been touched. It's a fresh zone. So we are looking to take out take out this liquidity, or looking to grab this liquidity, then slam down essentially. That's what we're looking for. So we see price grab liquidity, and what do we see again? Liquidity is grabbed. We see a strong rejection is what we always want to see. This is being repeatable. This is repeatable. Same thing happened 3 times in a row. And history seems to repeat itself. So we're not banking on the fact that this is always going to hold. It's not a guaranteed strategy, but we're seeing that it's holding itself. It's a consistent framework. And yeah, we're not banking on the fact that it's always going to be this easy. It's not. Sometimes this isn't going to work, so. But, yeah. So we see a strong rejection, and we enter with stop loss again, kind of just above the shot down. I'd put it above liquidity zone, liquidity round. TP is to the weak low that failed to break supply. So TP is right here. We see price come down, come up, and I'd probably stay into this trade. However, price does come up quite a bit, then continues down. So I'd be quite wary to stay in this trade, but honestly, could stay in this trade, could get out right here or something, but price eventually does um take profit. So 1 second once again. All right, so here we are, and just continue to instill this, so bearish, see higher lower lows being broken, and overall we still are bearish. We're just looking for us to get all the way back down here and continue, but internally so our bearish. Let's scale down, look at London and Asian session when we're looking at the open. And what do we see? Asian session, we see price push down, push down, push down. What do we see here? Internal break of structure. We see another break below. Then we see during London session, we see a zone built here. Liquidity is under this, but yeah, just being aware of that. We see a zone built here. Price pushes up, comes down, pushes up, break of structure, internal break of structure. What are we now? We are bullish, looking for buys. See price come up, come down, pull back a little bit. Now price opens on New York. IBOS. So yeah, let's scale down now. It's a 5 minute. Now we're honing in. See price here. What do we see here? Again, more liquidity. We see price come up here, come down, come up here again. What is under this level? Money. What do institutions need to push price? Money. So we understand that there are stop losses, ton of stop losses. Someone enters here. Where are their stop loss? Right here, targeting up here, right? So price comes down. Liquidity again is under this area. We see price hold on. Okay, so we see price tap into this area again, and what do we want to see during new a sweep of liquidity from London session, and if we don't see it, we don't trade. Simple. We don't see it, we don't trade. We see it here. See the sweep and an aggressive close up into the range. We enter buy with our stop loss under the TP 2 week. Why do I have my TP here? Up here was our week high, so that's where I have my TP at. And that's basically it for the session. We had this trade, quick, easy trade. Was literally it. We see liquidity get built, sweep, enter, simple. Screenshot. All right, so back on. We continue to see price. Once price gets up here, what do we see? IBOS. We are now bearish on the internal structure. And again, where's our range still? On the higher time frame, between here and between here and here, still we're still looking for price to get down. We're just ranging, but we're seeing internal breaker structure. So yeah, now we're bearish. Continue to see price break lower lows and lower highs. Boom. Another IBOS. But what do we see before London open? We see a internal breaker structure to the upside. Another IBOS. IBOS to the upside. Now we are bullish into the, and just to further express this, like, let's look at this. Boom, boom, boom. Boom, boom, boom. Of course, hindsight, we see price this, but let's just look at this. Like, this is beautiful market structure right here. We see price pull down, breaker structure right here, boom. Continue pull down, another breaker structure right here, boom. But what do we see? See IBOS now, our internal structure shifted bullish, boom. See another breaker structure, boom. See another breaker structure, boom. You see? That's all it is, man. So now we're bullish. Now what do we see price do during London? See another IBOS. Another IBOS. Confirming, further validating buys. Now what are we looking for? And after every IBOS, after every break BOS, we are looking for a pullback to enter on. So when we see this IBOS on the in happen during London session, we are looking for a pullback to enter on. So we'll see price pull back. We scale down to the 5 minute. Let's go all the way back. Boom. See the session open. Again, what do we see? We see liquidity be built at this this support area. Again, we see liquidity gets built around this support area, and that retail traders are going to think will but as we know, creates liquidity during London session, then sweeps and reverses during New York. It's a repeatable pattern. That's what we're looking for. We're simply looking for patterns while backtesting. What do we see? See price sweep. See price sweep. And I'm aggressive here. Right? We already know that price is on the uptrend. We see price sweep, liquidity. I'm entering on the first sign of strength. You could wait for confirmation up here, but I entered on the first sign of strength. This is my model. This is my lower time frame model that I'm confident in, so I'm entering off of that. And I enter with my stop loss below the sweep and TP at a previous supply area. Why do I have it at the supply area this time? Well, we see price got here last time, and honestly, we see price hasn't been able to push down. I do want to see price at least get here again. We see liquidity is built above the supply. Because price has built liquidity above the supply zone. Pass. And typically, and since it's been mitigated already, it isn't strong. It isn't as strong. It isn't strong. So I am confident price will go here, and if it does, it'll continue on. So that's it. We entered. Price gets our TP. Simple market structure at its finest. New York session entry. Let it rock. Going to take screenshots again, so I'll be back. So now we're back on the higher time frame. What do we look at? We see price close above a strong candlestick, close above this swing low or swing high. All right, higher low. So now, what are we? We're bullish. After I see that, I'm bullish. After I see price already did this sweep, and then price continues up, I'm bullish. Now I'm waiting for price to come down and create more market structure, yada yada yada. We're looking for price to pull back now. So see price pull up. Now we are looking for the pullback. Then we're looking for an entry. So let's scale down. Let me write that again. I forgot. See price break above the we could say supply or really resistance area. Resistance area slash supply. No, yeah, supply zones slash swing high. So, market structure has been broken to the upside. We are now looking for a pullback, then continuation. So that's what we're looking for. And so let's go down. So price gap. So we're looking at the London session. Asian session doesn't really show us much. But yeah, Asian session doesn't really show us much. But London session, again, what are we looking for? We are typically looking for liquidity to be created, a sweep, and then continuation. So let's go down. Where are we? Okay. All right. So once again, we see price push down here. We see price again. Liquidity has been created at this area. Stop losses are below this area. We are waiting for a sweep, then continuation. That's what we're waiting for. So, New York Open, we're not trading this. What does this tell us? Not much. We're waiting for reaction here. We're waiting for a sweep, because what is price really going to do? Is price really going to come up here again and then just tank down? Probably not. This whole game is about probabilities. We may be wrong. We may not be wrong. But we're going to stick to our edge, which is this. So See price come down, sweep, instantly strong reaction. Price isn't gonna just create the strong reaction then just slam all the way down. The probability of that happening too isn't more favorable than price coming here, then sweeping liquidity, then continuing up. So where's our stop loss? I placed mine this time at Asia high. Not sure why. Again, this is a new edge I'm trying out, just trying out different things. But at the start of New York session, to give us something to give us to like react to, you know. Let's see, price sweep liquidity, and I'll say that. Got that there. Boom. And then strong again. These strong candlesticks up. Candlestick up gives us strong conviction and confluence that price will continue up. Good boom. Yeah. We enter with stop loss below the sweep and TP. I think I'm gonna start putting my stop loss below the sweep. Again, gonna keep back testing this new strategy and seeing how well it works, but gonna put stop loss below the sweep because placing it anywhere isn't really aligning with market structure. You know, after we see a sweep, if we do see a continuation below that sweep, it likely will not hold, especially if we see a strong reaction, then the sweep gets just blown, then likely we're not going to see that sweep hold, you know, and likely that trade is just invalidated and just gonna wait till next day to see another trade. And TP at Asia high. Realistically, it could have been at London high, but Asia high gave us a higher risk to reward, so I placed that there. But that was basically it. Again, these were traded. I backtested, then I came back to do this. This wasn't marked all the trades up at the same time. No, I did these trades while I was seeing it. Like I didn't see this trade play out. Then I said, okay, I would enter here. No, I entered here. Through a backtest, of course. But yeah, that was basically it. That's basically it for this New York session. This is our, I think, 5th or 6th one. We have 1, 2, 3, 4, 5 left. So those are 6th one. So yeah, that was it for this session again. I'm gonna take screenshots and we're gonna move on to the next. All right, so next session, we see price take out this high. All right, and of course we're analyzing this right before a New York session opens. From 9:30 to 11 is when we trade, so we're analyzing this. We're gonna know all of this already happened. So we see a break of structure again. Let's go out to the 4 hour. At this point, we're just trading the swing structure. We saw a decent pullback right here. So our range is from, let's delete this. Like that. I don't want to do that. So our range now, scale down a little bit. For the 4 hours, just getting an overall gist of where we're going. We're going up, you know. So 1 hour, where are we right now? We're training this session, so we're gonna look back a little bit. All right, boom, break a structure here. Lowest point that broke the structure here. So this is our range from here to Really, realistically, would be here. So, yeah, let's scale down to the 15-minute. Where are we? We're here. So this is our range that we're trading in. We're looking for price to pull back once again. Bro, same thing keeps happening. What do we see happen here? We see price pull down, right? After this break of structure, we want to see a pullback. Pulls up, continues pulling up. Price starting to pull back again. Price pulls back again into zone where liquidity has been gathered. What can we expect? If from the patterns we've seen, price to sweep liquidity, then push up. That's what we're looking to see. All right. So let's go down again to the 5-minute. Let's see this play out. So what do we see here? See price create liquidity. Where's the stop losses here? So we see price tap down here. New York opens here, strong push-ups. So I'm waiting on another bullish candlestick. Honestly, just a sign of strength. Saw this candlestick here, entered, stop loss. Gotta be honest, it was kind of nowhere. It wasn't a good trade. That was not a good trade because my stop loss was kind of in the middle of nowhere. Honestly, a better trade was what it would have been if I waited for a break of structure here. If I waited for a break above this high, right? It's kind of crooked, but could have entered right here. Here. Stop loss like right here. TP like here. That would have been a better trade. I didn't do that in hindsight though. Didn't do that. Instantly got stopped out. So let's right here. Parts of New York saw a strong bullish candlestick. So yeah, liquidity has been swept. And yeah, so what do we see? We see price continue to come down. At this point, I'm not entirely looking for trades. I see liquidity's already been swept. But what do we see here? We see another liquidity grab. Why? I don't know. Liquidity sweeps once again. A strong bullish candlestick. Here I see a strong, big doji. I entered there. Realistically, entering here would have been the smarter choice. Good, decent confirmation candlestick. Enter up to here, where price created the London high, and I probably would have exited. I remember seeing this whole thing go out. I probably would have exited, because I'm not gonna wait until what the 2 days. This is a 2-day trade from November. November 26th to November 27th, this trade would have been going on. We're this close to our TP. We see a fat drop down. We see a push back up. We see resistance. It's not really pushing up. We see these wicks. Just cut the trade, bro. Just cut the trade. Or you could have put your stop loss below a higher low or something like that. But yeah, so and yeah, most of the time the trade will play out to the TP, but like if after I'll say three, I guess the trade hasn't played out and it's looking not as favorable, I guess I'll reanalyze probably. Um, I'm not sure. I'm gonna need to do more back testing for that. Probably take partials. Maybe just move stop loss into profit. Something like that. Let rest. Yeah, that's it. So that's this session once again. So screenshot and then on to the next. All right. So again, 1 hour. What do we see? 4 hour. What do we see? Prices continuing to push up. 1 hour. What do we see? This was just the session we traded. So if you're wondering why I have it cut off, it's because I only have it to show 9:32:11 because that's the only time I'm going to be trading. That's when you see the green box, and that's the only time I'm really honing in and getting my trades and not trading like any time else. I'm just to make my strategy really mechanical. So see a break of a higher low or a higher high, and I guess this is still our swing low, or right here, because this is really the lowest place that started or that broke this, the high. Well, we broke this one, and this was the lowest point. Break this one, this is the lowest point. I would say this, however, I do want to say this range. This is our range. Because this is just too tight of a range. I'm not liking how tight of a range that is, so I do want to say this is the range we're trading in right here. All right, so what do we see? Asian session, our structure staying consistent. We're seeing higher highs, higher lows, another higher low. Price creates what? Another higher low right here during London. Let's scale down. Ended up losing this trade right here. So yeah, what do we see? The price. Oh, did I say anything important? No. Okay, so slam down. Price pulls out all the way up. And what are we looking for? We're looking for buys, honestly. And if we don't see a decent buy opportunity, I shouldn't have entered. But surprise, surprise, we actually do. Let's go down. I don't want to see if this does hold on the 5 minute. Yeah, what do we see price create? We should be looking for buys. So what do we see price create on the 15-minute or 5-minute? Another liquidity zone. We get this liquidity zone swept, but price continues to create it, and then sweeps it again. But I entered hastily, or however you say that word. What do we start? Where do we start? Okay, right here. Liquidity has been grabbed from this zone. So this just shows us that this is a point where price does, or institutional buying is in power here, right? Near this liquidity zone. You see stop losses are below this. Boom. See, again, this has been happening time and time again. Liquidity is being built. My London session. When I say pro swing and pro internal, I mean pro like for the swing trade. If swing structure is upwards, and I'm trading buys, that's pro swing. If I'm trading sells, that's counter swing. Pro swing and pro internal give the highest probability of the market or your trade being profitable. Dog's barking. So yeah, I entered for a sell, and get stopped out as this wasn't Price's real move. Yeah, we get stopped out over here. What was the trade I should have entered here? Should have entered off of this liquidity sweep here. Price created liquidity and then swept and gave confirmation candle to the upside. This was the trade to enter that followed my model. So this is literally it. So for that session, I'm not sure where I was going here. I think I was going for a sweep of liquidity towards here, but I'm not looking for a sweep of liquidity towards the opposite side. It wasn't a probable trade. It wasn't a trade towards my probabilities, or favored for me. So yeah, this is it. Okay, time to screenshot. All right, so now we on to the next session. So we see price create a break of structure here to the upside. Boom. Confirming bullish sentiment once again. Now we see a strong pullback, as there wasn't really any liquidity here, so price pulls back really strongly, then continues pushing up. Here, honestly, scale down. Let's just scale down. Start of New York, we see another or Loki end of London, we see a internal breaker structure, so we should be bullish here. Should 100% be bullish here. And let's just continue scaling. Internal breaker structure. This is an F trade. Like on the rating, it's an F. The trade just doesn't align with market structure whatsoever. So, what do I want to start? On the 15-minute, we see a strong push up, and I don't typically trade fair value gaps. However, this was a great scenario where I did. Sometimes fair value gaps just don't really play out too well. Like here, it doesn't play out very well. Or let's see, this 3 strong, it's not big gap. Like here too, it's huge fair value gap. Sometimes it does, like this scenario, tap, but I don't like using it as a main confluence because I'm not very comfortable with it. I don't like trading fair value gaps too much, you know. However, it played out in this scenario, right? In this scenario, we did see a fair value gap in this candlestick. Again, on the 15-minute, I marked it. Don't typically trade. It's a great confirmation candlestick pattern. Just considering we are bullish, we're looking for those things. And if we scale back even more, where's our TP? Looking for price to take out, or just to reach this area. We're not really, yeah. I mean, yeah, we are. Looking for price to get into this area, I guess. At least into this supply. Into the supply zone. So yeah, see the strong fair value gap. What should have been the trade I made should have been entering off of that confirmation candlestick right here. Going for a 1 to 3, somewhere around here. That would have been the trade, right? Of course, fairy tale world. That didn't happen. So, entered here. I'm not too sure why I entered. I know why I entered now. Entered off of what I thought to be a super liquidity. However, what is price doing? We're going up. We're not going down. So the super liquidity isn't really as strong. It's not a strong confluence. Price is bullish, swing and internal. So we see this break of structure. See this BOS, see this internal BOS. We are looking for buys. Another reason why I wanted to see price come down, why I had this as my TP. I'm pretty sure on the 15-minute. No, it was the hourly. Yeah, the hourly. I saw this demand zone. Demand zone down here. It's not a strong demand zone. I'm gonna be honest. This isn't really a strong demand zone. It's been mitigated before. Prices came here before. Yeah, it's not a. It wasn't a strong zone. You know, it's not a fresh strong zone. So this didn't really play out. I'm gonna come back to that one. Had TP down here, and then so. We are looking for buys. We see this internal breaker structure. Looking for buys. Liquidity sweeps aren't strong to the upside, or aren't strong to the opposite side if it isn't aligned with structure. If it's not aligned with structure, it's not going to be as strong. You're not going to see it play out if you're not looking at the whole picture. We scale up to the 4 hour, we see strong bullish movement. We scale out to the scale down to the 1 hour, we continue seeing strong bullish movement. We scale down to the 15-minute, continue seeing strong bullish movement. Scale down to the 5-minute, continue seeing strong bullish movement. There's no reason for us to look for a sell here. This is why some liquidity patterns don't work, is because you're not looking at them in the right sense, right? Sometimes, you're just not looking at them in the right sense, right? So this very well could be a liquidity grab. Price comes down, grabs liquidity, comes down, pulls back, and then continues up. But looking at this in a bearish mindset isn't going to be profitable, you know. So, I'm gonna put this up here, and you know the drill. Gonna actually. The play here, the trade should have been a seeing the confidence in price could have had TP. Now I'm feeling stop loss below it, and TP at this support area. Again, we're bullish, so we're not looking for this price to tap this area, then just take, right? So yeah, this screenshot time. Yeah, so this is gonna be the last session, because I didn't trade this New York session because honestly I wasn't sure where to get an entry here. I'd love some insight. 1 hour, again, still bullish. However, we are looking for a pullback. Our range right now is from here. Let me change this back here to where are we? Probably right here. This is our range. We're playing within this range now. 4 hours still bullish. We got a break, strong break above this swing low, high, swing high. So we are looking for price to continue. Pullback, then continuation, of course. So, um, let's go down. 15-minute. What do we see price do? We see price come up, come down, come up again. Created this supply zone or demand zone here, but we are already in a demand zone, so or supply zone. But price comes up, breaks, creates an internal breaker structure. We see a high getting broken again. Then price comes down for the pullback. Price holds this low. Here, I did not get in for a trade. Why did I not get in for a trade? I didn't see a decent entry. I mean, I didn't see sweep of this liquidity. There's a bunch of liquidity down here, and I just didn't see a sweep. So I'm not confident to enter in a trade here. Could have entered, of course. If you think this is a decent enough sweep, this one tick sweep would have been stopped out though. You know, there's a bunch of people putting their stop losses right below here. You know, people will see this as a support area. Stop loss right here. TP there. Boom. Hey, the trade could have played out, but I wouldn't have entered that trade. Would have been high probability. So let's delete all of this stuff. What do we instead see happen? We see a breaker structure, internal breaker structure. And again, what's the 4-hour bias? We're looking for bias. So, but we haven't seen a pullback. So now we're seeing a decent pullback. 15-minute. Sorry, this is exhausting. I've been doing this for like 2 hours. I back tested, then I'm going over. It's exhausting talking. But we see an internal breaker structure right here. Price sweeps below, comes back up, continues to push down. What are we seeing during London? We're seeing an internal breaker structure. What are we seeing? What do we expect price to stop at? We don't expect price to get below this low. Why? Because this is our swing low. The last low that broke major structure. So we're not expecting price to get below this area, right? We're expecting this demand zone to hold, honestly. So we're expecting the price to get here. So what again do you think we see on the downside? So getting in for sells is pro, or it's counter swing pro internal. Our internal structure is bearish, as you see, internal break of structure to the downside. Our swing structure is bullish. We still haven't broken below this low, so we are still bullish, but our internal structure is bearish, right? So going into this let me delete this. Like that, we already know we got a breaker structure here. We don't need this or this. We could mark out our zone, our range that we're working within here. I'm pretty sure I had that for a reason. Why am I laggy? Hold on. No, I didn't. Okay. So I think I removed it earlier, but I had a box here, I'm pretty sure. However, our range is from here to down here. This is our range we're working within. So we see internal breaker structure, yada yada yada. Let's scale down. What do you think we see? First of all, we see liquidity being built in agent session. Surprising this time. Usually it's London, but it was built during Asian, and their stop loss is below this. People are not that. Boom, stop loss is right here. Selling down, whatever. But we also see liquidity being built here, right here. But where's the strongest liquidity? Here. Price is going to sweep all of this liquidity, then slam down. This is so much confluence to get in. There's so much opposing liquidity for price to take, then sweep down, right? So what do we see? We see price push. Okay, let me write stuff first. I keep forgetting to write stuff down. To not just take, to sweep. And why do we want to see a push down? Because if we scale out, what is our overall goal? To create a correction. Where into this supply zone or demand zone, where price came here, is unmitigated. The supply zone is unmitigated. So price hasn't touched the supply zone yet. So we want to enter to down here, right? Or yeah, enter first, sell to down here, and because we want to see price mitigate this and then potentially push up. I don't know if it pushed up. I stopped here, but yeah, we see a bunch of opposing side liquidity. In our opposing liquidity, we see this got swept. I didn't enter here because I wasn't seeing this. However, I did enter when I saw a bigger structure here. This stop loss was kind of in the middle of nowhere. Now this trade, this would have been a beautiful trade. We see a strong confirmation candlestick right here. Boom, boom. You could have your TP here and still have a great risk to reward, or even have it down here. Not sure if it's gonna get all the way down here, but here is a great, or even here is just so so you can have so much confidence in that trade. You can have a lot of confidence in that trade, is what I'll say. Of nowhere, when the better trade would end directly after the sweep is at this zone of demand where price has not mitigated yet. And that's basically it. This would have been the better trade. Boom, tight stop loss, great risk to reward. Both of these trades played out, but that would have been a better one. Stop. Yeah, I'm gonna take screenshots real quick, and then I do want to see where price does continue to go. If it does continue the bear structure or not. But that is it for this deep analysis of backtesting of this model. This entry model, this analyzing. As you can see, I think we were one didn't trade one. We had 10 trades. I think we were 80%. We had an 80% win rate. I think we lost 2 or 70 or lost 3. I'm not sure if we lost 2 or 3, but we lost a few. great risk rewards. All of them were 1 to 2.5 to 1 or above. Some of them could have had even better risk rewards, but it's still just working on the strategy, working on refining it. What is the strategy? Looking at London and Asian session, looking at liquidity being created, looking at supply and demand zones on a higher time frame, that's going down to the 5 minute, waiting for a sweep or even a fair value gap or something like this. Um, trading with the swing, trading with the internal structure. But if we do have a swing structure, if we do have swing and internal structure, um, if we are pro swing and internal, that gives us even more confluence. But we are trading with the internal and swing. So we saw many examples. We saw pro swing, pro internal, and this trade is counter swing and pro internal. This is counter swing. Why? Because we do know that price is in an uptrend. It is in an uptrend swing wise, but internally we know we did see lower highs and lower lows being built, so we did enter for a sell. However, if it was pro swing, pro internal, like here when I entered a counter swing, counter internal, I entered a sell here when it was against the swing trend and against the internal trend. That's a low probability trade. A pro internal trend is always going to be more probable. A pro swing and pro internal is going to be more probable. But that's basically the strategy. I hope you guys enjoyed. And yeah, gonna continue back testing. Gonna continue just refining and creating a trading plan and all of that, but making it into one single session, a very confined time zone. You see that even though it's like an hour and 30 minutes of training, there's so much opportunity in a 24-hour day, or 23-hour day. But this is the strategy. And oh, we're still stopped.